All right. Well, hello, everyone, and welcome to today's session on net earnings from self-employment and SSI and Medicaid. My name is Molly Sullivan. I'm with Griffin-Hammis Associates, which we call GHA for short. GHA is an organization that's been providing training and technical assistance for over 30 years to support individuals across the spectrum of disabilities to become self-employed and small business owners. For this webinar, I'm joined by my incredible colleague, Sierra Ladroma. Sierra will be monitoring the chat box throughout the webinar. And on that note, if you haven't already opened the chat box, we ask you to do so. And you can do that by clicking on the icon that reads chat at the bottom of your Zoom window. Please use that chat box to ask questions that you have, share ideas, and leave comments. As I mentioned on the previous slide, we will stop at times to answer questions. We'll have a couple designated Q&A times for this webinar. So if you do post a question in the chat box, just know we'll tackle it as we have time during the Q&A breaks. Lastly, I want to thank the U.S. Small Business Administration and the National Disability Institute for leading the Community Navigator pilot program that creates the space for this webinar to happen. While this webinar is funded by the U.S. Small Business Administration, all the conclusions and recommendations expressed here are those of the authors and do not necessarily reflect the views of the SBA. Now, at the end of the webinar, the National Disability Institute team is going to share information with you about some upcoming events, some additional webinars, as well as some information about the Small Business Hub website. All right, so let's take a look at the plan for our time together today. So the focus for today's webinar is to look at how a self-employed person's earnings affect their SSI and the Medicaid that comes with it. To tackle this topic, I'm going to begin by taking a few minutes to make sure everybody knows what SSI is and what the related Medicaid is. Then we'll take a look at self-employment earnings, so you understand what self-employment earnings are. Once we've covered those two kind of core topics, we'll bring them together. And we'll look at how self-employment earnings affect SSI, and then how self-employment earnings affect Medicaid. Now, this is actually a fairly big agenda. Please know that I am going to try to stay really focused on the topics of self-employment earnings as they relate to SSI and Medicaid. And what that means is that in this particular webinar, we aren't going to be covering the Social Security disability insurance benefit, which is another cash benefit that Social Security administers, nor will we be covering Medicare today. But I do want to take a few minutes and share with you some ways that you can learn about those benefits, as well as learn more about the topics that we're going to be covering today. So for starters, I want to point out that we have more webinars about benefits and self-employment that are available and upcoming. This is actually, this particular webinar is actually part of a series that we started last year and that we're finishing up this year. Last year, in 2022, we did 5 webinars on topics related to benefits and self-employment. The first one was really just a basic overview of the common public benefits. And in that webinar, we explained what Social Security disability insurance is and what Medicare is, what supplemental security income is, and what Medicaid is. The second webinar, we explored the common business structures and looked at some key considerations for choosing a business structure when you receive Social Security disability insurance, Medicare, SSI, or Medicaid. Now, the third webinar was focused on Social Security's plan to achieve self-support, which is called PASS for short, PASS. And we looked at how PASS can help some people pay for business startup expenses. Now, the fourth webinar was all about the self-employment resource exclusions. And in that webinar, we explained ways that business assets like a business bank account and equipment can be excluded from financial need-based benefit resource limits. So in that webinar, we covered things like property essential to self-support, which is a special work rule that excludes assets that you need to be self-supporting. And we also looked at ABLE accounts and how ABLE accounts can support self-employment. The fifth webinar, we explained what net earnings from self-employment are and how they're calculated. Now, I'm going to actually be touching on this topic of net earnings from self-employment today. But please know there's an entire webinar that goes into a lot more detail that you can watch if you'd like to dig in and learn a little more. So you can access all of those webinars on the Disability Small Business Hub website on the events page. And Sierra, when you get a minute, if you could, please pop a link in the chat box to that events page. Now, in 2023, this year, we have 4 more webinars that are about benefits and self-employment, including this one, the one that you joined today. And this one is about the effect of self-employment income on SSI and the related Medicaid. In the coming months, we'll also do a webinar about the effect of self-employment income on SSDI, Social Security Disability Insurance, and the Medicare that comes with it. Then we'll do a webinar on how to report self-employment income to Social Security for the SSI and Medicaid program. And a fourth webinar on how to report self-employment income to Social Security for SSDI and Medicare. So you can see all together, we've got quite a series of webinars about benefits and self-employment. At the end of this webinar, we'll explain how you can subscribe to the National Disability Institute and get email alerts about when the 2023 remaining webinars are scheduled and open for registration. Now, while these webinars can be a great way to build your knowledge, if you or someone that you work with would like one-on-one help understanding how work will affect benefits, I really encourage you to reach out to a professional in the field of disability services called a benefits planner. And I want to take just a minute to explain what a benefit planner is. So a benefit planner is a professional that generally works for a nonprofit or a state agency or some kind of employment program and specializes in understanding the public benefit work rules. Now, benefit planners go by a handful of different titles. A common one you'll hear is a community work incentives coordinator, which we call CWIC, CWIC for short. Another name is just work incentive coordinator, or benefit counselor, or benefit planner. So regardless of the title, these professionals provide a one-on-one counseling for people with disabilities about potential changes to benefits when working, and also how to use special benefit program work rules to maintain healthcare and other needed benefits. In every state, there is at least one benefit planning program. It's called a Work Incentives Planning and Assistance Program. It goes by the acronym WIPA, or WIPA for short. You can find the WIPA project in your area by using the Find Help feature at choosework.ssa.gov. You can also find the WIPA project in your area by calling 1-866-968-7842, or using the TTY number, 1-866-833-2967. Now, in some states, the State Vocational Rehabilitation Agency also provides benefits planning as a part of their services. So if you or anyone you're working with is receiving services from a state VR agency, be sure to ask the VR counselor for help finding a benefit planner. Another option is to contact your local Center for Independent Living and ask them for help with finding a benefit planner. If you're not familiar with Centers for Independent Living, they're essentially nonprofit organizations that support people with disabilities and living independently. Now, some CILs have benefit planners on staff, while others may be able to help you find a benefit planner in your area. On this slide, you'll find a link to a national directory of CILs. So in summary, there are a number of ways beyond this webinar that you can continue building your knowledge about benefits and self-employment. So as you listen to the information that I'll be sharing with you, rather than trying to take on learning all of the details of it, set a goal to gain a better understanding of the basic concepts. And if you're receiving benefits, get connected with a benefit planner who can help you understand more specifics, get more in-depth advice and guidance as it relates to your specific situation. All right, so with that, let's begin building your knowledge around benefits, starting with a brief review of what SSI is and then the related Medicaid. So supplemental security income, which is called SSI for short, is a monthly cash benefit, and it's based on financial need, eligibility is, and it's administered by Social Security. Now, there's three basic eligibility rules for SSI. First, the person must meet Social Security's definition of disability or blindness, or a person could get SSI if they're age 65 or older. So in other words, this first eligibility rule, what it tells us is that this is a benefit for people who have a disability or 65 or older. Now, the second eligibility rule is that the person must have low resources. And resources are also called assets. So you can kind of think of those two words as being one and the same. Now, resources are things you own that could be used to pay for food and shelter. And common examples of resources are bank accounts that you have or retirement accounts. There are some resources that are excluded, like property essential to self-support and ABLE accounts. But ultimately, the majority of resources do count for the SSI program. So for the sake of this second eligibility rule about resources, the value of a person's countable resources must be below $2,000. And if the person is married, that the couple's countable resources must be below $3,000 to be eligible for SSI. The third eligibility rule is that the person must have low income. And income is basically any money that you receive in a month. So common examples of income are Social Security disability insurance, the other cash benefits Social Security administers, and earnings, which is what we're going to focus on here today. Income with the SSI program, income can also include free food or shelter that a person receives, and that's essentially because the SSI program, that benefit is intended to pay for food and shelter. So if a person receives some free food and shelter, they ultimately can count some of it as income. Now, in terms of income, Social Security does have some deductions that reduce the amount of income a person has that they're going to count. And they actually have a step-by-step calculation that includes all these deductions, and we call that the SSI calculation. Now, we're going to go into a little bit of detail about the SSI calculation later in the webinar, but you can actually find some helpful examples and more detail about this SSI calculation by going to Social Security's webpage that's called Understanding SSI Income. And Sierra is going to drop a link to that Social Security webpage in the chat box. So I encourage you, if you want to know more about that SSI calculation, to check out the examples and information on that webpage. For now, just know that Social Security uses a calculation to figure out a person's countable income. And to be eligible for SSI, the person's countable income needs to be below the maximum SSI amount, which is $914 per month this year in 2003. If a person's married, their countable income combined must be below $1,371 a month. So if a person is eligible for SSI, if their income is low enough and their resources are low enough, the SSI benefit amount is going to be the difference between that maximum SSI benefit and their countable income. So the difference between those numbers ends up being the SSI benefit amount. So it's helpful to make sure you know which benefit you're receiving before you begin digging into understanding the work rules, because the work rules vary from one benefit program to another. So there's a few ways you could go about confirming if you have SSI. A person can log into their My Social Security account if they've set that up on the Social Security website. They can call Social Security or look at recent letters from Social Security that will say what type of benefit that you have. Usually that's written on the top of the letter. So that's SSI, it's a financial needs-based benefit. So let's go ahead and look at Medicaid to see how Medicaid fits in. So Medicaid is a financial need-based health insurance. And it's funded by a combination of federal and state dollars, but it's actually designed and administered by the state. What's important to know is that in each state, Medicaid is actually a little bit different. Eligibility rules can vary from state to state. Coverage rules can vary from state to state. Even the name of the Medicaid program can vary from one state to another. Given there's so much difference from state to state, I'm only going to be able to share really high-level information with you about Medicaid, which I think will be helpful, but it's only going to get you so far because it does differ from state to state. So if you're receiving Medicaid, or if you're working with someone who's receiving Medicaid and has questions about the way self-employment will affect their Medicaid, it's best to help them get connected with a benefit planner. So just know that you're going to keep hearing me say that over and over. Really, for individualized personal information, it's so good to talk it through your situation with someone who knows these rules. But I can give you some information to start with. So at a high level, in terms of eligibility, what's true in all states is that for a person to be eligible for Medicaid, they have to fit into one of the Medicaid eligibility groups that are allowed in a state. And one of the most common Medicaid eligibility groups is the group that's people who get SSI. So with that group, a person can get Medicaid based on the fact that they're eligible for SSI. Most states have this group. In other words, most states give people who have SSI Medicaid. In fact, a lot of states just automatically give people with SSI Medicaid. There's a handful of states that don't just automatically give it to people with SSI. There's at least one more restrictive rule people have to meet. Virginia is an example of that kind of a state. So not everybody in Virginia who has SSI has Medicaid, but most people do. Now, also in some states, there's a Medicaid group for people with disabilities who work. And that group in a lot of states often has a high earning limit, so you can earn a good amount of money and still keep Medicaid. And that group will also have often a high resource limit, at least in some states. Now, there's other ways to get Medicaid. There's other Medicaid eligibility groups for people with disabilities, as well as a number of Medicaid eligibility groups for people who don't have a disability, like children or pregnant women or people age 65 and older. For this webinar, I'm really just going to focus on Medicaid that's based on someone who has SSI. So the Medicaid that comes along with the SSI benefit. That's what we'll talk about during our time together today. It is also really good to confirm if you have Medicaid and how you get it. So for a person to find out if they have Medicaid, in most states, it means contacting the Medicaid agency in the state that does the eligibility decisions. But I encourage you to work with a benefit planner to figure out the best way to confirm that detail. All right, I realize I just gave you a lot of information. So I just want to pause for a minute. Actually, I take that back. Let me give you an example. Make things a little bit more concrete, and then I'm going to check for questions. Okay, so let's look at our example, Chen, and then I'm going to check in and see if we've got any questions out there about eligibility that you need to clarify. Okay, so in this example, we have Chen, who is 28 years old and lives in Maryland. So she is, she's blind, and she recently completed her bachelor's degree in accounting. Now, she did have an unpaid internship last year, but that's really been her only work experience up to this point. She has no income coming in other than SSI right now. And she has $1,200 in countable resources, which is the balance in her checking account. That's the only resource that she has. So she receives $914 of SSI a month, and she gets Medicaid because of it. So you can see in this example that Chen meets all three of the SSI eligibility rules. She was found eligible to meet Social Security's definition of disability or blindness. Her countable resources are $1,200, which means they're below that $2,000 resource limit. And lastly, she has zero countable income. So her income is definitely below that maximum $914. Since she has no income, her SSI benefit amount is $914. She gets the full amount. And because she's eligible for SSI, she gets Medicaid automatically in the state of Maryland. So Maryland is one of those states where they give everyone with SSI Medicaid. Okay, now, before I move us on to the topic of earnings, I'd love to check in and see if there are any questions about just some of these basics of SSI and Medicaid.
Hi,
Sierra.
Molly, this is Sierra speaking.
Hi, Sierra.
There was just one question about eligibility, and I believe we tackled it, but it might be just worth mentioning again.
Okay.
The question was from Elizabeth, and she had asked, can you be 65 with no disabilities and potentially qualify for SSI?
Yes, that's exactly right. That's exactly right, Elizabeth. You could be receiving SSI because you're someone with a disability or blindness, or because you're age 65 or older. So one or the other. With both of those groups, you still have to have resources below the resource limits and income below the income limit. Great. Thanks, Sarah. Fantastic. Okay. Well, now that we've got the basics of SSI and Medicaid fresh in your mind, I'd like to move us on to the next core concept, which is this idea of earnings. And I want to clarify what earnings means. So in terms of earnings, I want to talk about earnings as someone who's a wage employed person who has a job, and earnings as it relates to being self-employed. Okay, so hang with me here. So for the sake of our webinar, I want you to think of earnings as being money a person gets for work they perform. Now, in the US, the majority of people are employed by a company or an organization, and they get earnings from their employer. Now, in that situation, it's actually really easy to determine what a person's earnings are. The employer generally pays an hourly wage or a salary, and they give their employees a paycheck at some sort of regular interval. Maybe it's once a week or once a month. For Social Security purposes, generally, the gross wages that a person gets from their employer are considered their earnings. So let's say, for example, I work for a company that offers pet grooming services, like dog washing. And over the course of the month, I work 100 hours, and I get paid $13 an hour. That means I will have earned $1,300 for the work I performed. That's my gross wages. And the company pays me accordingly. So this arrangement is often called wage employment because the employee is getting paid a wage by their employer. All right, that's generally a pretty straightforward idea, this whole wage employment. So what about someone who's self-employed, who has a business? What are their earnings, right? That's what I want to get you to get clear about here. So generally, there's one of two earning situations that occurs. Either the business owner sets themselves up as an employee of the business that they started, in which they would get actually a paycheck from that business and a W-2 at the end of the year. Or the second scenario is they don't set themselves up as an employee of the business. And in that second scenario, where the owner doesn't set themselves up as an employee of the business, this is really by far the most common situation that you're going to see. In fact, the Small Business Administration Office of Advocacy reported back in, it was December of 2021, the most recent data on this, that about 81% of all businesses fell under this category. So the vast majority of people don't set themselves up as an employee. And part of that's because it can kind of be a paperwork headache, or you have to work with a payroll company just to manage the paperwork. So a lot of people who start a business or become self-employed, they're not going through the headache of doing all that setup. It just financially doesn't make sense for them to do that. Now, the key point I want to get to is that in the second situation, where the business owner is not an employee of the business, the net earnings from self-employment are the person's earnings for Social Security purposes, right? Because they're not getting a paycheck. They're not set up as an employee. So instead, it's the net earnings from self-employment that are considered the person's earnings. And I am going to walk you through what that term means so you understand it. Now, considering the vast majority of businesses fall into this second situation, we're going to focus on that second situation in this webinar. Right? We're going to focus on how net earnings from self-employment affect SSI and Medicaid. If you're someone who has set themselves up as an employee of a business, since we can't go into the details of that within the scope of this particular webinar, I encourage you to talk with a benefit planner to kind of begin to understand what that means in terms of the earnings you'll have from your business and how that affects your benefits. All right, so let's dig into this concept of net earnings from self-employment, and then look at an example, and then I'll check in for questions, okay? So you know that when a business owner is not an employee of their business, like that second scenario, their earnings for Social Security purposes are net earnings from self-employment. So what is NESE? And I should say that term, net earnings from self-employment, we often call it by its acronym, NESE. So I'll start using NESE. Just know that's what that means. So to understand NESE, there are two key terms you need to know. The first is business revenue. Now, business revenue is the money that the business brings in. Let's say, for example, I'm a massage therapist, and let's say I get paid $36,000 from my customers over the course of the year. All of that money I get from my customers, that $36,000 is my business revenue. Now, the second key term is business expenses. These are the items and services that I pay for that are necessary for me to run my business. So sticking with the massage therapy example, let's say for the year, I have $12,000 in expenses, like rent and insurance and linens and new lotion and laundry. So keeping those terms in mind, let's look at the two steps that are involved in calculating NESE. With step one, I take my annual business revenue and then I subtract my annual business expenses. The result is called net profit. So in my massage therapy example, I have $24,000 in net profit, right? 36,000 of business revenue minus 12,000 of business expenses means I have $24,000 of net profit. So with step two, I take that annual profit of $24,000 and I multiply it by 0.9235. And the reason that the Social Security does this is that it accounts for the fact that as a self-employed person, I actually have to pay more in Social Security tax than a person who's wage employed. So think of it as an extra deduction just because you're self-employed. So after applying that 0.9235 deduction, I end up with $22,164 of NESE for the year. And that's NESE. Now, for the SSI program, for that benefit, Social Security takes my annual NESE and they divide it by 12 to come up with my monthly NESE amount. And Social Security, oddly enough, will do that even if you've only been in business for 3 months or 6 months or 9 months out of the year. They always divide your annual NESE by 12. The only time they don't do that, it's really rare. It's if the IRS changes the tax year, which I don't think in the history of the IRS they've ever done that, or if the business owner passes away. So generally, they're just dividing the annual NESE by 12 to come up with the monthly amount. So they're not looking at your actual monthly NESE, essentially looking at what your average monthly NESE is. So if we take that concept and apply it to our scenario here, my massage therapist would have $1,847 in monthly NESE. That would be the earnings for the month. All right. I would like to look at one more example. This time I want to come back to our scenario person, Chen, and then I'm going to check in for questions about this concept of earnings. So Chen finished her accounting degree and decided that it made the most sense for her to be a self-employed accountant. So she went into business and she made $20,000 in business revenue in her first year. All of the customers she had paid her a total of $20,000. And she also had expenses. She had $6,000 worth of expenses that she paid for over the course of the year. So for step one, we take the $20,000 of annual business revenue and we subtract $6,000 of expenses. And so then our result is net profit of $14,000. So that was step one for us. $14,000 of net profit. Now, the second step is to multiply that net profit by 0.9235. And when we do that, we end up with NESE of $12,929. So you can see, even though Chen brought in $20,000 of business revenue, that's not her earnings. Her earnings are $12,929. All right, so now for the SSI program, Social Security will take Chen's annual earnings and divide it by 12 to figure out what her monthly earning is for a particular month. So if we take that $12,929 and divide it by 12, Chen would have $1,077 in monthly NESE. And that's her earnings. All right, I know that was a lot of numbers, but hopefully the fact that it was just 2 steps makes it a little easier. So I want to pause and check in and see if there's any questions about the NESE concept. Sierra, do we have any in the chat box?
Hi, Molly, this is Sierra speaking. We do have some questions, and I kind of have them organized with the slide. And for slide 11, kind of just taking it back a little bit, someone had asked, is a ticket to work representative the same as a benefits planner?
No, but and let me clarify, a ticket to work representative may be a benefit planner. A ticket to work representative, Ticket to Work is a program that's focused on providing employment services, specifically for Social Security disability beneficiaries, people who get SSDI or SSI. Some Ticket to Work providers are also benefit planners. So it's likely if you're working with a Ticket to Work provider, they could be a benefit planner or have a benefit planner on staff. Not all benefit planners, though, are involved with the Ticket to Work program. So somebody could be working with a benefit planner and there's no connection to the Ticket to Work program. Okay, I'm ready for the next one.
Great, thank you. Another question is referring to slide 11. Are there states that have no asset limit for Medicaid buy-in for the working disabled?
Yes, there are. Yeah, I'm happy. I don't think I could say those off the top of my head. And I also wouldn't trust my memory. But I mean, I live in I'm actually joining you from the state of Washington, and the Medicaid eligibility group for people with disabilities who work here in Washington has no resource limit. Yeah, it also has no income limit. Most states, their Medicaid group for people with disabilities who work, most states have an income and a resource limit, but generally they're more liberal than the SSI rules. Okay, what's the next one?
All right, we're going to slide to slide 12 for questions.
Great.
And I'm just going to read these off as they came in by quote.
Okay.
I thought one has to have worked and acquired a certain number of credits before being able to receive anything.
Ah, great. Great question. So that eligibility rule you're talking about is not for the SSI program. That is an eligibility rule for the Social Security disability insurance benefit. That's a different cash benefit. It is a cash benefit that's administered by Social Security, just like the one we're talking about here. But the one where you have to work and pay in and reach insured status, that one is called SSDI, Social Security Disability Insurance. It's a different benefit. It just happens to be administered by Social Security, just like SSI. So yeah, and SSI can be, you can receive SSI, you could be an infant and receive SSI. There's no like lower age limit. There's no connection. In other words, there's no connection to work with it, right? Because an infant obviously doesn't have a work record. So yeah. I think that tackled it. Mm-hmm.
And this is Sierra speaking again. I'm going to move to slide 13 questions with the Nessie example. Okay. The question is, what happens if the person is just starting a business and has nothing for SSI to determine what to count?
Oh, that's such a great question. Right. And this, I'm gonna probably not give this answer as much justice as I'd like to. I will definitely give you some food for thought, but we are going to have a webinar that's totally dedicated to reporting earnings, self-employment income for the SSI program, and we'll go into more detail in that webinar about this question. It's such a good question. We basically have a webinar dedicated to answering it. But at a high level, what I would say is that anybody who's receiving SSI, who's about to become self-employed and start a business, you actually want to do a little bit of financial projections. You want to estimate how much you would likely have in net profit. That means thinking about what your sales would potentially be and what your expenses would potentially be. So it's really important to sit down and sketch out some numbers so that when you do start working, you are self-employed and you report that to Social Security, you're prepared to give them some of those projections. And, you know, none of us have a crystal ball. We don't know for sure whether our projections are going to end up being right. I mean, actually, if you do have a crystal ball, well, you've got a great business. So you probably know what to put. But we're really just giving an estimate, and we have to start by giving something, right? But we can always change the estimate that we give Social Security. So I would encourage people to every month be tracking, what did I end up getting for revenue? What did I have for expenses? What did my net profit end up being? And if it looks like my net profit is way higher or way lower, I can contact Social Security and say, actually, those projections I gave you, they're not so great. Let me give you something a little bit better to work with. So that's a little bit about projections.
That's great. This is Sierra speaking again. I have two final questions, Molly.
Okay, great.
And it refers to slide 13 again. The question is, what can be considered expenses within a business? And who determines what expenses are and what can be a tax write-off?
Yeah. So fabulous question. The term business expenses here basically means IRS allowable business expenses. And so that means that you're going to want to follow whatever the IRS rules are for what you're counting as a business deduction. And I am not an accountant. I have no business giving you any advice or any information beyond that, other than to say it's important when you're self-employed to, at least in the beginning, get connected with an accountant who can look over your expenses and help you recognize what are business expenses and what you can claim. So really, I guess the short answer is, when you look at that term business expenses, I want you to think of IRS deductible business expenses. And the second part of the question is, how do you determine what is and isn't a business expense? That's where I would encourage you to loop in a CPA, an accountant, to help you with that. Or if you have an IRS tax assistance center near you, they can provide some advice for free. And then keep good records. Yeah. I think I tackled everything in that question, Sarah, but let me know if I didn't.
Did.
Okay,
yeah,
great.
You did. Thank you so much.
Yeah.
This is Sierra speaking again. I have one final question. And do you happen to know if ex-offenders who are released from jail and reach 65 qualify for SS?
That is a question I could not answer off the top of my head. I don't know for sure. I guess what I would say for that particular question is my email is at the end of this slide deck, and where Sierra, you can pop it in the chat. Whoever posted that, please just email me. I'm happy to look around in the rules to answer that question. It's just not something I could answer at this moment. And I think that's good. Yeah. Further questions?
Yes. Thank you so much.
Okay. Fantastic. Great. So now what I want to do is, now that we know what SSI is, you're clear about that. And now that you know what net earnings from self-employment are, you're clear about that. I want to talk about what happens to the SSI benefit when you have NESE, okay? Okay, so the general rule with the SSI benefit program and work is the SSI benefit amount will reduce as a person's earnings increase. But when it comes to that shift in the SSI benefit, Social Security only counts about half of a person's earnings. As a result, the person's earnings plus their reduced SSI, they end up being more than what you have if you just have SSI. So I'd like to clarify how that's possible by looking at a few details about the SSI calculation. Now, I'm not going to go into all the weeds about the SSI calculation, but I am going to hit on just some of the key points. As I share this, if it would be helpful for you, you could certainly be looking at Social Security's Understanding SSI Income webpage. And Sierra, maybe if you could just pop that page back in the chat box for folks so it's readily available. You can find more information there or look at more of the SSI calculation in detail. They even have examples. It's really helpful. For the sake of our time, I'm really going to focus on the details around the earnings, how earnings affect the SSI benefit and the earnings part of that calculation. So when it comes to earnings, Social Security has a few deductions that reduce the amount of earnings that they'll count. So first, they always exclude $65 of earnings. There's this standard $65 deduction that they apply to anybody and everybody who receives SSI and works. In some cases, there's an extra $20 deduction that can be applied to reduce earnings. That deduction's used to reduce unearned income if a person has that. If they don't have unearned income, then they get to use it to reduce their earned income a little bit more. So after those deductions, the $65 deduction and potentially that $20 deduction, Social Security then deducts half of a person's earnings. So let's make this more concrete by looking at an example. Let's say, for example, I have $885 of monthly NESE. So Social Security would deduct $65, and in my case, they would also deduct another $20. So altogether, $85 gets deducted, which brings me down to $800. And then they deduct half, which is $400. So that brings me down to $400 of countable NESE. So to calculate my SSI benefit, they would take that maximum SSI of $914 and they would reduce it by $400 because they're counting $400 of my NESE. So 914 minus 400 of countable NESE gives me $514 of SSI. At this point in the calculation, many people will begin to worry that they're losing money because they see that the SSI benefit went from 914 to 514. Totally reasonable concern. But there's an important step we got to look at, and that is, in addition to having the 514 of SSI, I now also have 885 of NESE. I have a whole other pot of money coming in. So when I add those two together, I get $1,399 between my 514 of SSI plus my 885 of NESE. And $1,399 is more than 914 of SSI. So if I didn't work and I just got SSI, I'd only get 914. So you can see you can end up with more. Now, there are actually some additional earned income deductions that apply to some people, not everybody, but some people. So for example, there is an earned income deduction that's specifically for students under 22. They get a special, pretty big deduction to their earned income. And there's also a deduction for people who are statutorily blind. Really any work-related expense that someone who's blind pays for can be used to reduce the amount of their countable income for the SSI program. Now, when you reach out to a benefit planner to get more of that personalized one-on-one information, remember how I suggested earlier, I'm just able to give you some general information, build your knowledge, which is good, but you really want to be talking through your specific situation with someone who knows these rules really well. So when you connect with a benefit planner, you can learn more about those deductions to see which one, if any of the additional ones might apply. And really the idea with these additional deductions is that they just reduce the countable NESE as well as any earnings, they reduce it even more. So, and by doing that, it allows you to get more SSI. So what I'd like to do, just to make this feel a little more concrete, is I want to go back to our example of Chen and see what happens to her SSI when she has $1,077 of NESE. Okay, so a couple slides ago, we calculated that Chen's monthly NESE was going to be $1,077. So of that $1,077 in NESE, Social Security is going to deduct $65. They're not going to count. And then there's this other $20 deduction that would apply in Chen's situation. And so the third part is Social Security deducts the half of what's left. So that takes her $1,077 of NESE, and it brings it down to only $496 that's going to count. That's all that's countable, $496. The maximum SSI is 914. So if she's got $496 of countable NESE, that's going to bring her SSI down to $418. When we take that 418 of SSI and we add it with her $1,077 of NESE, you get a total of $1,495, which is more than 914. And I mentioned earlier that there were some additional income deductions that may apply to some people, which could reduce their countable income even more, which means they could get more SSI. And actually, one of those could even apply to Chen, the special deduction that's for people who have blindness, who are receiving SSI, called the blind work expense. So there's even more deductions that could have applied to Chen that could make her countable income even lower and allow her to keep more of her SSI. I do want to share that if you're interested in learning more about those extra deductions, you'd probably find a great resource in looking through the Social Security Red Book. And Sarah, if you could drop a link in the chat box to that, that would be great. The Social Security Red Book has a description of all the different work incentives and work rules that are really supportive to working. And I believe it even has a couple SSI calculations in it as well. So you could learn more in there. All right, I know that was a lot of numbers. So, and I just want to remind you that the plan and the beginning I mentioned was just to build your basic knowledge, that you're not going to become an expert and run all the numbers. So really what I'm hoping you've gotten out of this at this point with SSI is that as you have net earnings from self-employment, the SSI benefit will go down. It will go down by about half of whatever your earnings are. And there's examples you can look at on the SSA website, in the Red Book, and that you really would benefit if you receive SSI, connecting with a benefit planner to help you think through that SSI calculation for you, what it might mean for you, what your SSI would potentially be. So you have a sense of what's happening. Okay. Sierra, are there any questions in the chat box about this SSI calculation and how the SSI changes when you have NESE?
Hi, Molly, this is Sierra speaking. Yes, there are some questions that came through.
Great, great.
With slide 16 and the example of Chen, the question is, how does Chen's new income affect her health benefits? And does she still qualify for Medicaid?
Oh, wow, that's beautiful. That's the next slide. So I'm going to hold answering that question. That's actually the next two slides. I'm going to explain what happens to the Medicaid that Chen has in general, and then we'll look at Chen's situation. So let's hold that one.
Okay, perfect. Sierra speaking again. The next question is back to slide 14. The question is, what if your income is constantly changing? How quick are they to respond to the changes when it comes to your income?
So with SSI and self-employment, they're just in general, just keep this in mind. They're not they want to know what your annual NESE is, and they're going to use an average of it each month. So when you're self-employed, your income will go up and down, but they're still only using the average. So, so it's not like you're reporting every month and saying, oh, last month I had NESE of 500. And then the next month you're saying, oh, and last month I had NESE of 1,000. The only reason you would report to Social Security when you're self-employed about your earnings is if you feel like your annual NESE is changed in a, at least somewhat a significant way. So that's really the answer around NESE, is that they're using an annual average anyway. So you would only be reporting if the overall annual amount is going to change. With other income, with all other income in the SSI program, they actually do want to know when it changes every month, and they will adjust your check. Generally, this is like a webinar in and of itself, but generally they're looking at your income from 2 months ago when they calculate your SSI check for today. So there's what they tend to call a 2-month lag in the SSI check changing. The important thing is just to make sure to if you had a change in your income, you had some income last month, make sure to let them know by the 6th of the following month. And then that allows them to get it changed within the 2-month lag.
Great,
Okay.
thank you so much.
Yeah.
Molly, I'm going to go ahead and save the other questions for
Great.
the end of the presentation.
Perfect. Perfect, Sierra. That's great. Thank you. Okay, so let's go ahead and take a peek at the very last topic we're covering, which is Medicaid. So earlier I pointed out there's a number of different ways the person could get Medicaid. They have to fall into a Medicaid eligibility group. And the reality is every Medicaid eligibility group has its own unique rules, of course, right? So for this webinar, I'm going to just be talking about what happens to Medicaid for someone who's getting it because they have SSI, what we call SSI-based Medicaid, right? Their eligibility for Medicaid is because they get this SSI. So for somebody who is getting Medicaid based on their SSI, when they go to work, when they're self-employed, even when they're wage employed, and they have earnings, their SSI could start going down. So the first thing to know is that if you're still receiving the SSI benefit, you're still eligible for the Medicaid. That didn't change, right? You're still getting the SSI check, you're still getting the Medicaid. Nothing new there. The really cool thing, though, is that if you have so much in earnings that it makes your SSI go to zero, you can still keep your SSI-based Medicaid because of a rule that is the most boring name in the world, but one of the most cool rules in the world, called 1619B. 1619B. And this is a rule that says if you have so much in earnings, your SSI goes to zero, you get to keep Medicaid and you actually get to keep your SSI claim open. You're not getting a cash check because your SSI is zero from all your earnings, but your SSI claim is open and you get to keep Medicaid. This is incredibly powerful. So to use this rule, a few things have to be true. You have to continue to have a disability. To use this rule, you would have to be receiving SSI if it weren't for your earnings. So if we remove the earnings from the picture, you'd be getting an SSI check. You have to have countable resources below the $2,000 resource limit. You have to need Medicaid, which essentially just means you have to use it. And the last thing is that there is a type of earning limit. So you have to have annual earnings below this earning limit. It's a pretty significant earning limit. It's pretty high. So for example, in Maryland, where our scenario person Chen is, the 1619B earning limit is $48,604 of annual earnings. And that's for 2023. The amount tends to go, usually it goes up every year. So Sierra, if you could drop a link in the chat box for folks to that there's a Social Security website that provides a lot more detail about this 1619B rule. And you can see the annual earning limit for every state, District of Columbia, it's all there. So you can see for someone who gets their Medicaid based on their SSI, it's possible to earn a good amount of money, to be self-employed and be bringing in a good net profit and still keep Medicaid. And, you know, I think just considering how difficult it can be for someone who's self-employed to pay for health insurance, to get health insurance and to pay for it, this is an incredibly powerful work rule, this 1619B. So what I'd love to do is let's take a peek at the next slide, Chen, one more time, and then I'll open up for questions. All right, so we figured out a few slides back that that Chen was going to have $1,077 of net earnings from self-employment. And then we also figured out a couple slides back that she would end up with $418 of SSI when she had that the NESE. So in Chen's situation, when she's got 1,077 of NESE, she's going to continue to keep her Medicaid based on the fact that she's still receiving an SSI check. Super simple. She still gets the SSI, Medicaid's a given. Now, if Chen were to go gangbusters in her business, and she gets a lot more accounting clients and she starts bringing in more income, she could get to the point where her NESE is so high that it makes her SSI drop to 0. If that happens, she could use 1619B, that work rule, to keep Medicaid and to keep her SSI claim open. And the fact that she's in Maryland, we know that she could have up to $48,000, about somewhere around $48,000 of NESE for the year and still have her Medicaid and keep her SSI claim open. So you can see this is just a fabulous bit of information, and one that we certainly want more people who are receiving SSI pursuing self-employment to know it's possible. Okay, so Sierra, let's do this. Let's check in one last time for questions.
Hey, this is Sierra speaking, and the questions I have right now can wait until the end. So
Okay.
that would be great. Thank you.
Perfect, perfect, perfect. Okay, so I just have one more slide. I just want to do a quick recap and make sure people have our contact information, and then I'm gonna then we should probably grab those questions because I'd like to Sierra, because I'd like to turn it over to Nikki and Lexi and the NDI team. So real brief, what I'd like to say, just kind of recap our time. So during this bit of time we had together, you've ideally learned a few things. Ideally, you learned, or it was reinforced in your brain, that SSI is a financial need-based benefit. And in most states, it comes with Medicaid. You also learned that for SSI, when you're self-employed, your net earnings from self-employment are your earnings. You also learned that about half of net earnings from self-employment are counted when figuring out the SSI benefit amount. And lastly, you learned that when you have Medicaid based on SSI, you're going to continue to keep that Medicaid if you're still getting an SSI, simply because you're getting the SSI. But you could potentially keep it even if you're not getting the SSI when your earnings are so high through that 1619B rule. And you'll see when you look at the link Sierra shared in the chat about has the page on 1619B, there's a huge long list of every state, and you can see the 1619B amount, and there's somewhere around $35,000, $40,000, $45,000 a year of earnings. Super great, super great. So I encourage you to continue building your knowledge about self-employment and these benefits. If you are receiving benefits, I encourage you to reach out to a benefit planner to get personalized information